Hi, this is Ted Gudorf from Gudorf Tax Group. Today I want to talk to all the small business owners in the area. If you have a business and you have less than 100 employees, we've got a great idea to help you save taxes. Have you ever heard of the S-Corp election and wonder what that's all about? Well, let's talk a little bit about how that simple election can save you tens of thousands of dollars over the lifetime of your business. So when we have a business, we can either be a sole proprietorship, a limited liability company. We can be a corporation, that is a S corporation, a C corporation, or we can be a partnership. What are the advantages to being an S corporation if we have previously been a sole proprietorship? Let's specifically focus in on that. Well, when you are a sole proprietorship, what you're required to do is to report all of the net income of the business on your own personal 1040. And for the business portion of it, you file a Schedule C. Now, the tax law says that your net income from a sole proprietorship is subject to self-employment tax. That is a tax to pay for your Social Security and to pay for your Medicare. And that percentage is 15.3%. So for every $100,000 of net income, you're having to pay over $15,000 worth of self-employment tax. Now, that tax can partially go away if we take the step to elect to be an S corporation. What do we have to do? Well, in order to make that election, we form a limited liability company or a corporation. And at the time we file our taxes, we make sure that for the subsequent year we elect S-Corp treatment. And when we elect S-Corp treatment, we will no longer file a Schedule C, but instead will file what's called a Form 1120S. Now, on the Form 1120S, we are going to make sure that we have identified what your reasonable salary needs to be, and we will have to do payroll for that salary, whether it be for us or our employees. So if we elect S-Corp treatment, and let's say we establish a salary of $60,000 per year, what that means is that we will not have to pay self-employment tax on any amount above and beyond our reasonable salary, in the example here, 60,000, all the way up to the current cap on the self-employment side of approximately $130,000. So today, if we had net income, let's make it exactly at $130,000, we would be paying a self-employment tax of 15.3% on that full amount. If, on the other hand, we elect S-Corp treatment, we cap our salary at a reasonable salary. That is the amount it would take to hire somebody else to do our job. Let's say we cap that at $60,000. And we still had a total compensation of $130,000. $60,000 would come out as a salary. $70,000 would come out as an S-Corp distribution, not subject to self-employment tax. Therefore, we would be saving taxes of $70,000 times 15.3%. We would save that amount of taxes every single year, after which we make the S-Corp election. I think it's really important, whether you're a farmer or a small business owner on Main Street, that you talk to us about the possibility of making an S-Corp election, moving away from your Schedule C, and we can save you substantial tax dollars by eliminating the self-employment tax on everything above your reasonable salary. Well, we'd like to talk to you about this. Give Gudorf Tax Group a call, 937-890-8604. Love to hear from you. Have a great day. Thanks.